Kia ora, and welcome to the CoreLogic Property Market Update for Hui Tanguru, February 2025. As we progress through the first quarter of 2025, the market's anticipated turning point remains on the horizon. The CoreLogic Home Value Index shows that Aotearoa property values dipped by 0.1% in January, continuing a virtually flat trend in values for the fifth consecutive month. After a cumulative decline of 4.1% over the 6 months from March to August, there has only been a further combined fall of negative 0.4% since then. This could be a sign that a trough in prices is being found. The national median value now stands at a little under $804,000, which is 17.5% below the record highs from late 2021, early 2022, but still 16.3% above the pre-COVID level from March 2020. In January, property values across the main centres remain relatively stable. Tauranga and Ōtepoti Dunedin both saw growth of 0.1%, while Tamaki Makaurau, Auckland and Ōtautahi Christchurch fell by 0.1%. Kirikiriroa Hamilton stood out, growing by 0.5%, while Te Whanganui-a-Tara Wellington remained soft at negative 0.6%. This recent stability in national property values hints at a positive inflection in the housing cycle, with the potential for growth in values over the coming months. Since the mini downturn seen through the middle part of last year petered out in August, national property values have been in a holding pattern, not moving clearly in either direction. However, with mortgage rates having dropped significantly from their peaks, property sales volumes have continued to rise in recent months, setting the scene for a reduction in advertised stock on the market in the near term. Less available supply would create more competitive pressure amongst buyers, and it wouldn't be a surprise to see property values start to rise again shortly. However, it's important to note some headwinds persist that are likely to keep a lid on the magnitude of a housing upswing. Not all areas have stopped falling, including Te Whanganui-a-Tara Wellington. Given that the economy remains soft and the labour market subdued, it is unlikely we will see a sharp upturn in values. Debt-to-income ratio caps will also play a role in dampening the market in 2025. The year concluded with a little over 80,000 transactions, marking a 15% increase from 2023. Of the 6 main centres, Ōtautahi Christchurch experienced the largest year-on-year increase in sales volumes, up 22%, to more than 9,400 sales in 2024. The Tamaki Makaurau Auckland uplift was less pronounced as transactions, roughly 24,000, ended the year 8.6% higher than in 2023. 2024 was undeniably the year of the first home buyer, with a total of 26.1% of residential property sales snapped up by this group, a record proportion from at least the last 20 years. Owner-occupiers moving house had another quiet year, the second in a row. Their share across the year of 26.5% was roughly 2 percentage points below the 10-year average from 2013 to 2022 of 28.6%. Our expectation is this could mean there is some pent-up demand out there from people looking to upgrade, downgrade or relocate. Mortgaged investors picked up 21.7% of residential property sales over the year, a relatively quiet year following an also quiet 2023 of 21.3%. Perhaps most interestingly though, their share steadily grew throughout the year after falling to 20.6% in April. The share of transactions in December, 22.3%, saw a minor dip from the rising trend which had grown to 22.8% in November. Investors appear to have begun finding value in the market again, with falling interest rates and an improving market outlook encouraging them back. CoreLogic tracking of comparative market analysis reports generated by real estate agents, a good predictor of upcoming listings, shows the year has started strong for agent activity. The recently announced adjustments to the Active Investor Plus, or Golden Visa, encouraging foreign investment into New Zealand companies, has also brought about speculation of a similar loosening to the foreign buyer ban of residential property. As yet, there's nothing confirmed, but given some of the commentary, it feels like an adjustment could be in the works. The latest GDP figures for Q4 2024 revealed a continuation of recessionary conditions, with a 1% contraction in economic activity, following a revised 1.1% decline in Q3 2024. Additionally, the unemployment rate climbed to 5.1% in Q4 2024, the highest level since 2020. These indicators highlight an economy requiring support, which a cut to the official cash rate on February 19th would help to address. Expectations of that cut being to the magnitude of 50 basis points remain strong. The Reserve Bank signposted it back in November last year, and things have generally panned out as they expected. Following the 15% lift in transactions in 2024, our sales volume model forecasts another 12% increase to roughly 90,000 transactions in 2025. With that, we might see an increase in property values of 5 to 6%. For an insightful and comprehensive summary of the current market, be sure to download our latest monthly chart pack and subscribe to the New Zealand Property Market Podcast on your favourite podcast platform. Mā te wā.